आमदनी अठन्नी खर्चा रुपया. That's unfortunately the story of many households in India. But if amdani, that's nothing but income, is just half, but your spending is kharcha, is double of your income, how does that happen? It's all thanks to the credit card companies in India. In today's video, we are going to talk about the second largest credit card issuing company in India. Any guesses on that? Check out the full video. Hi guys, CA Rachana Ranade here, and I welcome you all to my first lecture about IPOs in the year 2020. So yes, we are going to talk about SBI Card and Payment Services Limited IPO. Let's understand a little bit about the background of the company, how it started, when it started and all that. So it dates back to 1998 when two companies, namely State Bank of India and GE Capital Corporation, they started this company with a joint venture. So basically joint venture is a type of organization which is started by two or more companies which come together. The stakes, the initial stakes, if I'm talking about, it was 60% and 40%. Eventually what happened in the coming years, GE Capital sold off its stake, something like this, wherein 14% was given to SBI again and 26% was given to CA Rover Holding. Okay. So currently now, if you want to understand, currently SBI holds this 14 plus this 60%. So total 74% is held by SBI, and CA Roving Holding holds 26% of SBI Cards and Payment Services Limited. Now IPO which is going to come up is going to be a combination of fresh issue and OFS. I've told about this in so many of my previous IPO videos as well. Whenever I say it's an OFS means offer for sale, wherein the existing promoters would sell off some of their shares and will give us, people like you and me, the opportunity to invest in the shares of this company. So it's going to be a mixture of OFS as well as fresh issue of shares. Now that you have understood the background, we have to understand the revenue model of how a credit card company earns. I tried to check out a lot of content wherein I tried to collate all the content, and I thought I should put in a very simplified format for you all to understand how a credit card company actually earns money. Okay, so let's understand this by way of a very simple example. Assume here we have a customer and here we have a shopkeeper. Okay, I'm sure everyone has seen a swiping machine which a shopkeeper will have typically, right? So there's a swiping machine. Now this swiping machine is typically owned by some company. Let's say this is a swiping machine of ICICI Bank. Now this fellow, the customer, has a credit card, and credit card is assumed of SBI. Okay. Now what happens? Assume this customer makes a transaction of 100 rupees. Now what will happen? He will swipe for 100 rupees through his credit card. Okay. Now SBI credit card company is going to say, dude, 100 rupees is receivable from you now. Okay. Because this customer has made a shopping, he took the goods from this shopkeeper and he's going to pay him money. But I'm sure everyone knows this. In a credit card transaction, this person need not pay immediately. So who is paying? It's actually the credit card company who is paying. So credit card company pays to whom? Credit card company pays to another bank. This bank in our example is ICICI Bank, which is also known as the acquiring bank. Acquiring bank. Okay. And this company will be known as the issuing bank. A company which is issuing the credit card in this transaction, the customer's credit card is the issuing bank. And for the shopkeeper, who is receiving the money, who is acquiring the money, which bank is helping it? ICICI Bank. So this bank will be, in this example, known as acquiring bank. Okay. So now what happens? Issuing bank is going to give entire 100 rupees? No. Issuing bank, assume, gives 97.5 rupees to acquiring bank. Okay. Acquiring bank in return gives 97 rupees. Okay. This percentage may vary. Some banks would charge 2%, some banks would charge 3%. That could differ from 2% to 3 to 4%. Now what happened in this entire transaction, let us understand. Who is at a loss? Is the shopkeeper. Because shopkeeper sold goods worth rupees 100 to him, but in return got only 97 rupees. Okay, so 3 rupees is a direct hit for the shopkeeper. Many a times you will find that 2% is a very common thing to happen. If you were to check it out, let us say 2%, then accordingly 1 rupee or 50 paisa here and there it will change. Right now we are taking 3% as a bank charge. Okay, so shopkeeper is going to earn 97%. What is the income for ICICI Bank, which is issuing this machine? Is the bank also going to earn something? Yes, because bank got 97.5 and they gave only 97. So 0.50 rupees is the income for ICICI in this case. How much did SBI earn? SBI is eventually going to earn 2.5 rupees. Why? Because SBI gave 97.5 and SBI is going to charge 100 rupees from the client. So SBI earned 2.5 rupees, biggest gainer. Now, there has to be a common medium. Please understand this. There has to be a common medium. Can SBI directly transact with the acquiring bank? Can issuing bank directly transact with acquiring bank? No, there has to be someone in between who actually helps out through this entire transaction. And who is that going to be? That is known as a network. Okay, now example of this network, very simple example. Visa, MasterCard. I'm sure everyone has heard about RuPay cards. These are the networks. So what is their work? Network is nothing but like a road, a connection point which connects two parties. Which two parties? Issuing party and the acquiring party. Okay. Now do you think network is going to do this entire transaction free of cost? Obviously not. So network demands some fee from issuing bank. Network demands some fee from acquiring bank. But the charge here is very less. It's very, very less. So it could be even like something like 2 paisa in this transaction from here. But this is just one transaction. You can imagine Visa transactions all over India, Visa transactions all over the world, and then you can imagine their income. Wow. So why did I explain this? Because we are going to talk about the IPO of SBI. And if you are talking about IPO, oh, that was a very bad color selection. Wait. Better. Yes. If you are talking about SBI card, we must understand if I were to invest in this company, how do they earn? And for that we have talked about this entire scenario. What could be the different earning possibilities? Quickly understand one by one. The very first income is this 2.5 rupees commission which they are going to get because they paid only 97.5 and they are going to charge 100 rupees from the customer. Number one. Number two, let's take this example. This customer pays late. Then what are they going to get? Number two, they can get late payment fee. Correct? Possibility number three, this guy pays in time but does not pay the entire amount. Then what will the bank earn? Interest. Yes. Number four, let's say bank is charging some annual fee for issuing the credit card. So it could be annual fees. Wow. Okay. That's how a credit card company earns. I hope you have understood it very clearly with this amazing drawing that I have made. But I feel that the concept is clear how a credit card company earns. Let's talk about the top 2 competitive strengths of SBI credit cards. The very first, SBI. The parent company SBI is such a big brand that, they have such a big business. It's one of the biggest banks in India. So you can imagine how big customer base SBI has. If they already have a very big customer base, then selling credit cards to your existing customer base is very easy, right? So acquiring more newer customers is not that tough task for SBI credit cards. So that's the very first competitive advantage that they have. Second, they have tied up with so many big brands and they have tried to issue partner credit cards also. Just for you to get a flavor of how they are issuing credit cards, I've logged on to the SBI credit cards portal, and here you can see credit cards. They have different varieties of credit cards. For example, lifestyle. Now here you can see SBI Elite card, wherein you get free movie tickets worth 6,000 every year. My husband has this SBI Elite card, and we definitely ensure that we spend this all 6,000 rupees and get benefited out of it. But we also have to understand this, that for that annual membership fee is 5,000 rupees. Okay, so all in all it's just an advantage of 1,000 rupees. Okay, anyways, second one is rewards. So let's understand now with whom have they tied up. In rewards, they have tied up with hospitals like Apollo. They have tied up with Tatas. They have tied up with many other entities as well. Prime also. For the third one, you can see here for shopping, they have tied up with FBB, with Central. So for travel and fuel, they have partnered with IRCTC. So just for you to give an example, what is the benefit? It says that you get a 10% cashback as a reward point, not as a cashback basically, as a reward point for railway tickets purchased through this card. Okay, so SBI again partnering with IRCTC, SBI partnering with Club Vistara. So Etihad, in simple words, if you can see here, they have partnered with so many big brands, and the moment you're doing good co-branding with other partners, the probability that your credit card sale increases is much higher. Okay, so let us understand, is there a potential for any growth upside is there or no? So for that, I tried to find out certain statistics. I tried to search on the net that how many people in India have a bank account. Okay, and it said that almost 80% population of India has a bank account. Okay, I found this as an article in Times of India newspaper. So 80% of the population of India has a bank account. Now try to take it down into figures. For example, the population of India is 135 crores. Then 80% of that comes out to 108 crore people have a saving bank account. Okay, try to understand my logic of this entire calculation. If 108 crore people have an access to a bank account, they might be having debit cards, right? But do you think all might be having credit cards? No. And please understand, not all will be eligible for a credit card also. So for example, if I am 16 years old, I might definitely have a debit card, but I might not be eligible for a credit card for a simple reason, I have no good source of income, right? So I've just applied a very, rough percentage, assuming that 50%, only 50% of this entire population who has an access to banking system is eligible for a credit card. Okay, in that case, what will happen? 54 crore people are eligible for a credit card. Okay, I again tried to find out of this eligible category, how many people actually have a credit card in India right now. I came across this Economic Times, one article was published in Economic Times, which said that currently only 4.89 crore people are using a credit card. Guys, that's just 10% of the potential. So you can imagine, out of the entire population right now, out of the entire population which is eligible for a credit card, and if you remember how I found out this eligible, out of the total people who have a banking exposure, uska bhi 50% I have taken, and out of this, only this portion is enjoying credit card right now. This is entirely untapped. What great opportunity can any company have to tap this untapped market and have a very, very amazing growth. So in the next section, we are immediately going to talk about the growth aspects which SBI is currently having and which they can have in the near future. So continuing with the potential growth discussion, what I've done is I've written few things down so that I don't waste time again in the video. I again found this statistic not in any article, but this is there in the DRHP, Draft Red Herring Prospectus. Okay, I have explained what is a DRHP towards the end of the video, so check out the full video to understand what is a DRHP. Number of credit cards which had been issued by SBI was 17.6% in 31/3/19, and in 39/19, so basically 6 months ended, it has grown to 18%. If I'm talking about the overall credit card spends, so I hope you're understanding the difference between 1 and 2. 1 talks about number of cards issued, okay, and 2 talks about amount rupees which was spent. So 17.1% spending, which has gone up to 17.9% spending. More spending on credit card, more beneficial for the company, and I hope now you understand how a credit card company benefits if a consumer is swiping a credit card. Okay. One more very interesting fact which I again came across in their DRHP only, that credit card spends grew at a CAGR of 35.6%. Just for you to give an example, what do I mean by this? Assume that in the previous year, an Indian spent 100 rupees by swiping a credit card. Then ideally in the current year, he is spending 135.6 rupees in the current year by spending a credit card. okay, by swiping a credit card basically. So in India, CAGR for credit card spends grew at 35.6%, but for SBI, for people who are swiping SBI cards, it was a CAGR of 54.2%. So this is way above the industry average. So it's a very positive sign for SBI. By the way, if you remember in one of my previous some IPO videos, maybe in Prince Pipe video, I had asked if you want a separate video on CAGR or not. And I had got many responses stating that yes, make a separate video on CAGR. So I promise within 1 week, okay, within 1 week I'll get you a separate video for CAGR also, okay. So that's it about the growth potential. Just now we have understood how a credit card company earns and what could be the various sources of revenue for any credit card company. Right now we are going to talk about the different source of streams of income for SBI credit cards. If you check out the 3 years data, 2017, 18 and 19, their total revenue has grown by quite a bit. I can say it has more than doubled in the last in a span of 17 to 19. If you check out here, interest income has grown steadily. Income from fees and services has also more than grown by twice, more than twice it has grown up. Service charges are high enough. Business development income is good. Insurance and commission income is good. So if you check, it's a good distribution of the overall income, wherein the top 2 income sources for SBI credit cards is interest income, and the second one is income from fees and services. The point which I told you is that interest income basically comes if you don't clear all of your dues, and from fees and services could be your late fee charges. Coming to the revenue statement, what I've done is basically I've tried to give you a year-on-year growth now. In the first part of the financials, we just talk about only one segment, that is the income. But we have to understand income growth year-on-year, and we have to also compare it with the profit growth year-on-year. Okay, so if you check it out here, from 17 to 18, the growth has been 55% for revenue. From 18 to 19, it has slightly dropped. It is 36%. Still, it's not bad at all. I've not calculated the CAGR here for a period of 17 to 19, but it is growing at a good pace. If you check September 18 half yearly figures with September 19 half yearly figures again, the growth has become again a slight higher. It is coming back on track. So from 36%, it has grown to 40%. It's half yearly. So you can imagine on a yearly basis, it's going to be like very high. Same if I talk about profit. Profit was like 61% growth year on year from 17 to 18. From 18 to 19, a year-on-year growth of 44%. And half year ending, it has been tremendous with a 93% PAT growth. That's profit after tax growth. In generally every IPO related video, I talk about the valuations part. But please understand, for me to tell you about the valuations, the red herring prospectus has to be in place. Now, for those who are listening to this document for the very first time, you have to understand what is it. Any company which comes up with an IPO has to file something known as an information document, which contains a lot of information about the company. This information document, once it is submitted to SEBI, in a very primitive form, is known as a draft red herring prospectus. This draft is first submitted to SEBI. After a few weeks, another prospectus is submitted to SEBI, that is known as the red herring prospectus. So 2 prospectuses are filed with SEBI, which contains a lot of information about the company. Just for you to understand how much information, see, this is the draft red herring prospectus of SBI Cards, which was filed with SEBI on 26th of November 2019. It's barely 1 month ago, a little bit more than 1 month ago, and it is only 485 pages. So you can understand how much information about SBI card is filled up into this document. Once this draft red herring prospectus is filed, ideally roughly 6 weeks after this, so 1.5 months after this roughly, the company has to file the red herring prospectus with SEBI. Okay, red herring prospectus. This is not the maximum timeline. This is a general timeline. This is an indicative timeline that I'm talking about. If this really happens, then we can expect the IPO to come up in Jan to March 2020 timeframe. Okay, so till the red herring prospectus is filed with SEBI, I can't talk about any valuations because till then the price band is also not declared. So I will be making another video about SBI Cards IPO. That'll be like my part 2 of the video, wherein I'll be talking about valuations about the company. That's it from my side. I hope you have enjoyed this video. Consider subscribing to my channel and keep a close watch on announcements which SBI Cards might make up. wherein they'll disclose what would be the actual issue date. Once the actual issue date is announced, once the RHP comes out in public, I'll definitely make a part 2 of this video. Also, let me know in the comment section, would you really want a part 2 from my side or not? I'm sure you're going to say yes, but still I'm asking you, just out of the blue I'm asking you, right? So that's it from my side. Jai Hind, bye-bye.